Hey, welcome everybody. It is currently 12:10 p.m. August 24th, and I wanted to do an intraday technical analysis on a few of my favorite indices. We're gonna kick this off with SPY. SPY had this very strong move to the upside a few days ago, where everyone was bearish in a bull market. SPY just had this strong move to the upside. The dip buyers stepped up and they bought in. And yesterday we were able to hit intraday new all-time highs, and we closed just a little bit above all-time highs. Okay, I told you guys yesterday that I still believe we have more upside, and my price target is 449, and above 449 will be 454. Okay, now just because I said 449, obviously it does not mean it'll go up right away. Okay, the stock market doesn't do what I say, unfortunately. So right now, you look at this candle, which is today's candle. We have a choppy candle. All right, the price is just going sideways. This is a good sign, guys. When the price goes sideways, it means that it's basing or building up strength for another move to the upside. Now, if it would have got up here and it hit this resistance line today, my price target would have been around 449. But it could go sideways for a little bit and then move up. So if that happens, my price target will obviously change from 449 to 450. It depends on when SPY wants to move up. So basically, my price target, I still believe there's more upside, and my price target for now is 449, but it could change to 450 in the near future. Okay, now this area right here, the white area, if you have been watching my videos for quite some time, you know exactly what that area is. And that area is the area of liquidity. Now, if we go to my Facebook, I have a private Facebook, all right, that you guys can join. And if you look at this picture, I added as my cover photo to try to explain what the area of liquidity is. Okay, so imagine the stop losses is right here. Okay, and under that stop loss will be a cluster of stop losses, where people will set the support level. Under the support level will be a cluster of stop losses. Okay, now market makers, they like to trick us out by setting up support level and resistance levels, and then they want to fake us out. Okay, this is a bull. In this case, this is a bear trap. They take out the stop losses and they get us stopped out, only for them to push it back up. Okay, this happens literally all the time. It happens a lot. So this is an example for support, but it can also happen with resistant level. Okay, so this white area with potential stop losses are clustering up from the retail traders. Now, the reason is, in case you didn't know, you look at the previous behaviors of SPY. Every time SPY got to that level, it pulled back. So, of course, retail traders, they're watching the same chart. They're watching a daily chart, just like me and you are right now. And they're going to assume that if it gets to that level, it's going to be another pullback. So when they get to 449, most retail traders will be looking to short or to buy puts. Okay, now remember, retail traders, when it comes to them, which is us, we are retail traders, right? 90 to 95% of us lose. Okay, so if most retail traders want to short here, we do not want to follow the crowd. Okay, I recommend, now this is a bull market, I don't recommend calling the top or trying to short a bull market. Okay, I'd rather us be bulls in the bull market. But if you are going to short this, try to short it around here in the area of liquidity. All right, that's what it's called. Where the stop losses get built up, it's the area of liquidity. Now, I like to use the ATR as my area of liquidity. Okay, now let me bring up my indicators. That's my RSI, and this is the ATR. Right now, the ATR has a range. It's the average true range of 348. Okay, based on this candle. Right now it's at 447. So 348, that's around 450. Okay, 450 roughly, all right? That's around this white area. So most people use the ATR to exit trades. Well, guess what? I use the ATR to enter trades. Okay, I do the opposite. I try to be different, because if 95% of traders lose, why would I want to be the same as everyone else? Why would I want to use conventional methods, the same conventional method that was taught to us, which is also the same conventional methods that the market makers use to trick us over and over and over again? You guys understand that? So if you're going to short this, I don't recommend shorting in the bull market. I'd rather we stay bulls in the bull market and look for buying opportunities. But if you're going to short it, I want to look out for the bears as well, or the scalpers, because there are ways to make money on both sides. If you're going to short it here around 450 to the 451 range. That's just my opinion. Okay, because I believe that's where market makers will look to fake us out. They'll fake us out here if it gets to this resistance or close at this resistance. It'll fake out the shorters, break out, bring in the breakout traders, and fake them out as well, only to come back down. Okay, now does that always happen? No, but it happens. Okay, and I want us to keep that in mind. That's how the market makers play. Is they play the shorts and they play the breakout traders, and they'll push it however or whenever they want. Okay, so this is why I say, because it's so manipulated, I'd rather us stay a bull in a bull market. Okay, so let's try to identify levels that we would feel comfortable to enter. I told you before, I like to enter and use my moving averages as support and resistance levels. So if I'm bullish, I want to enter around the support level. Now, if you look at the past behaviors of SPY, you see in a strong bull market, SPY spends a lot of time bouncing off the 5-day moving average. Okay, and every now and then, when it gets below the 5-day, it'll bounce off either the 13, the 20, or the 50. Okay, now keep in mind areas of liquidity. Now, if a stop loss is here at 443.89, I believe our area of liquidity would be just under that. Okay, so I like to enter just under support level. I don't like to enter at support level or bounces off support level. I like to enter off support level and make my stop losses even lower than that. You guys understand? So let's identify the support levels. Okay, so we got here 443.89. This will help me out. So 443.89 would be the first support level. Okay, now the 5-day moving average is pretty close to it at 443.50. And then the 20-day moving average, which I believe is critical, is 442.40. Now keep in mind areas of liquidity, so let's round it down to a little lower, 442. Okay, so 442 is a critical support level. Okay, below that I'm bearish. And if it does get below, well, I'm not going to say I'm bearish, but it will definitely start looking more bearish. And below 442, our next and final support level for the bulls is the 50-day moving average around 435. Below 435, we do have support at 428, which is based off the weekly. This is the 20-day moving average. So around 428, 429. So below 429, based on this weekly chart, I would be very, very bearish on the SPY. However, you look at this weekly chart, it's trading above our 5-day moving average. Like I said, in a strong bull market, it bounces off the 5-day moving averages a lot. Okay, so on the weekly chart, I'm not seeing a buying opportunity, but on a daily chart, well, I'm not seeing a buying opportunity neither. Okay, so you don't want to buy the tip, you want to buy the dip. You don't want to buy the tippity top. Okay, you want to wait for a nice pullback to one of our support levels. Okay, you can enter just below it, just like me. I want the area of liquidity to get taken out. Or you can buy it off the support level when it's a successful bounce. Most people, they try their best to try to catch a move before the move started, but you can still make money after the move started. For example, if the stock or indice or whatever you're trading is already on the way up, you can make money on the way up. Okay, you don't have to catch it before it moves on the way up. Okay, so I'm still bullish on the SPY. I still believe we have more upside. 449 price target than 454. If you're going to short it, short around 450.5 to the 451 range. Set your stop loss around above 440, 451, 452. Okay, wherever you're comfortable at. Okay, but in my opinion, this is a bull market, so I believe we should remain bullish. Keep our eyes on these levels, 443.5 and 442, and of course 435. Those are the levels that I will look to accumulate. Below 428, I would be bearish. Now here's a look at the VIX, which inverses the SPY, is trading below all our moving averages. Okay, so it's very bearish. A bearish VIX is very bullish on the SPY. Okay. So if we look at the fear indicator, fear and greed index, still a lot of fear in this market. I do not believe we're going to have a major correction until we start seeing more greed. Okay, we want to see retail traders get more greedy and think the market will never drop, that's when the market makers will pull the rug. But while retail traders are still fearful, still full of fear, SPY will just continue to creep up. Okay, and dips will get bought, because if a lot of people are short in this market, they're gonna have to cover, right? And if too many people are shorting up here, when it drops, they're gonna cover, and it's gonna push the market up. And then people who's gonna catch FOMO, or people who stand on the sideline, gonna buy in. It's gonna keep pushing the market up, and it's gonna keep on going until more people stop being fearful, trying to be the next Michael Blurry. And when we see more greed, more extreme greed, then we'll have a nice major correction. Until then, stay a bull in the bull market, and I don't recommend calling the top. Okay, bottom line, 449 price target. After that, 454. All right, watch these levels: 443.50, 442, and 435. Those are the levels I would look to accumulate or scale in. All right, moving on to QQQ. QQQ is very bullish, but as you can see, it's trading outside the upper Bollinger Band for the second day in a row. Overextended. I do not recommend buying it. We did have this bull flag here, which QQQ beautifully broke out of. Some people would say it's a microphone pattern, but whatever, right? We're not down there. We're up here. It's looking bullish. We had this bull flag. Boom, it's up. Okay, so I do not recommend buying QQQ. It's overextended. It's probably gonna... It doesn't have to pull back, okay? When it's overextended like this, a lot of people think, oh, it'll pull back. It can, but it doesn't have to. Remember, a correction can come with price when it pulls back to a previous support level, or a good support level. Like right here, down to 367 maybe, because that's where it broke out. Or it can correct itself through time, meaning it goes sideways, okay? So we're definitely going to continue to watch QQQ. I am bullish on QQQ, but I do not recommend buying just yet. Let's wait for a pullback. Critical support level right here, which is where it broke out. I say around 367 to the 368 range. And then our moving average is all bunched up together, tangled together. So the 20-day is around 367.37. So that's a critical support level, 367. And below that will be 360. All right, those are the two levels that I would look to accumulate. All right, 367 and also 360. Okay, below 360 I would be bearish, and it could be a big drop to the downside. But if that happens, we'll address that in the next video. But right now we're bullish. It's just gonna, I think it's just gonna move sideways. This is not the time to enter. Wait for a nice pullback. Like I said, around the threes. I'll give you a range, 367 to 368. All right, and then the range below that will be about 360. Yeah, just 360 to 361. All right, those are the levels that I will look to accumulate. Moving on from QQQ to ARKK. Now ARKK, we had this double bottom right here, as you can see, that I point with the pink arrows. Now I mentioned that I believe we're on the fifth wave heading up. Okay, so we have wave 1 here, 2, 3. This was the fourth wave down. And it's possible that we could be heading up to the fifth wave. What I want to see is ARKK trading above or closing above the 20-day moving average. The 20-day moving average is at 120 and 18 cents. Right now, ARKK is at 120 and 14 cents. So it's 4 cents short of the 20-day moving average. It's only 12:24 p.m. right now, so there's about 3 to 4 hours left in the market. So we still have time to see what it wants to do. If it does not close above the 20-day moving average, that's starting to look bearish. And if it, I'll be very bearish if it breaks below the 113 level, which is where the double bottom is. Okay, but right now, I believe that there's a strong chance that ARKK will close above or around the 20-day moving average, and in the coming days to weeks, it could start building straight to the upside. I have a 142 price target. Okay, you can see here the double bottom, and it started here, and this could be a W pattern. So we see a W pattern starting to develop. Okay, let me see the bigger picture. Yeah, we still got this inverse head and shoulder pattern as well. This is the shoulder, the head, the other shoulder, but we need it to head up and break the neckline. All right, so I'm still bullish on it for now. And when will I be bearish? If ARKK starts breaking below 113. Until then, for me, I will be scaling in and buying up the dips, okay? But if it breaks below 113, I'll cut my loss, no problem. Okay, so bottom line, I'm bullish on ARKK still, 142 price target. All right, moving on to Bitcoin. Bitcoin, we're getting some take profits right now. Seeing the big Clifford candle, that's not bad, it's okay. It's still looking bullish, still trading above the 200-day, and you also see the 20-day moving average about to cross above that, which is very, very good sign. Okay, we still have this area of imbalance here that has yet to get filled. Too many sell orders, no wicks to the left, no wicks to the right. So this area right here, too much sell orders. There was no buy orders. So it needs to balance out. Maybe get some buy orders in there. Okay, so I do have a price target of 54K. Above 54K will be my next target, 59K. And then back to all-time high, okay? But that's just the price targets. Where would we look to enter? Where do we want to enter? We want to enter at a support level, okay? We don't want to enter at the tip only for it to drop and mess with our emotions. We want to, you know, if you're a trader, you want to get good positions. Positions is important. If you're long-term, buy whenever you want. You know, if you're long-term, buy whenever you want, and just average down or average up, whatever you choose. If you're a long-term, okay? Because Bitcoin, I'm bullish on Bitcoin for the short term, medium term, and long term, okay? But if you're short term and you're a trader, I recommend buying at one of the support levels. So one of the support level is 47K. A critical support level is 46K, which is around where the 200 and the 20-day moving average is, okay? So we got 47K and 46K. But 46K is critical. Below that, we have a previous high over here around 42.3, but we could say 42K. And then below that is our 50-day moving average around 39.5. Okay, so let's say 39K. All right, so those are the levels that I would look to accumulate. Below 39K, I would be bearish, and it's a possible chance that it could drop all the way down to 27 to the 29K in area. And if it does, I will buy as many Bitcoins as I can, okay? But I don't think it'll drop that low, so I'll be watching these other levels. 46K looks good. I would definitely scale in around 47 to 46K, and of course 39K. All right, like I said, below I'm bearish, but right now chart's looking good. Yeah, we got this nice red candle. It's okay. Pullbacks are healthy. 54K price target to fill this area of imbalance, and above that is 59K. All right, guys, so that's the intraday update. All right, is that not the end of the market? You still have about 3.5 hours left in the market. Okay, so I hope this was able to help. All right, you guys stay safe out there, and I'll see you all soon.